It just struck me that AI will be incorporated into every company. And so as a founder, you may define yourself, oh, I'm an AI company. You're going to see over time that that's not really the case. It will be like calling yourself an internet company, in 1999.
Welcome to Superhuman AI, the podcast where you learn what's going on in AI and how you can use it. I'm Zain, and today I'm joined by my co-host Hassan and Chip Hazard. Chip has been a VC for almost as long as I've been alive. Chip's been in venture capital since 1994, so it's safe to say that he's seen it all. From the dot-com bubble to cloud, mobile, social, and now AI, he has a unique perspective that very few other VCs have. We'll ask Chip about what companies he's excited about, what kind of companies he's backing, and what it takes to make a great founder and a great team in the space. I think you'll really enjoy this conversation.
So welcome, Chip, to Superhuman Podcast.
Hassan, Zain, great to see you.
So for the audience, Chip has been a venture capitalist since 1994. He was a journal partner at Greylock. Then in 2002, he decided to start his own venture firm called Flybridge Capital Partners, which today manages $1 billion. He has been an early investor in some of the most prolific companies in the last decade, some called like MongoDB, Firebase, Crashlytics, to name a few of them. So Chip, you've had like an amazing career in the venture capital industry and a very long one as well. And that has given you insight into different technological waves. The dot-com era, the cloud era, and now the AI era. Love to get your perspective on like what you see some similarities and differences in these waves.
When I became a venture capitalist, it was 1994, which was the same year that Netscape launched. So gives you a little bit of sense for where I was when Web 1.0 became a thing. And the venture industry has obviously changed a lot over those years. The industry as a whole raised just under $5 billion in 1994. Obviously, fast forward 30 years later, it's hundreds of billions of dollars. And so the industry has gotten much bigger. It's gotten much more global. It's gotten much more specialized. At the core, what we do every day is the same. We're looking to back amazing founders, looking to build transformative companies in big and exciting spaces that are oftentimes enabled by big platform shifts. And so the Web 1.0, obviously, the internet went on to change everything about society and how we interact, both commercially and as consumers. And we see the similar trends happening again in the AI space. In between, there was other waves, obviously, social, mobile. Cloud computing was a major platform shift in the enterprise environment, each one of which sort of enabled new companies. And that's the high-level point as a venture capitalist and as a founder, is that platform shifts tend to create opportunities for fast movers to identify opportunities, to see opportunities where maybe some of the big entrenched incumbents don't. And it gives them and their customers a reason to look at new things. And so that's the opportunity to be seized by new companies in this new AI era.
So Chip, like, I always find it like really interesting, right? Like what you just said, right? Like new platform shifts, new opportunities which are coming up. But if you're gonna like go back to the Netscape era, like of 1995, where do you think like the AI wave is today from that perspective?
Yeah, it's definitely moving at a faster pace, I would say. There was a lot of infrastructure that needed to be built in the Web 1.0 day, much of which was physical infrastructure, network layer that had to be built. But there are many similarities. If you think about, sort of ChatGPT launching in November of 22 is sort of the same as Netscape launching in October of 94, as sort of the seminal moment when all of a sudden as an end user, you could be like, wow, this is different. This is, totally different than the command line interface I used to use to access the internet, totally different than accessing, OpenAI's, GPT-3, which wasn't particularly good or easy to use. And so it's that seminal moment that sort of kick things off. And the similarities that we're seeing in the marketplace in the early days of the web, the winners were building up the infrastructure layer. They were building the network infrastructure, the Ciscos of the world. They were building the server infrastructure, the Sun Microsystems of the world. And that infrastructure build out takes a while. And that's what we're seeing today with NVIDIA, obviously in the compute layer, driving a lot of success, both the chipset providers and the GPU cloud providers. And then obviously the model providers are seeing a lot of success and demand in the marketplace. But if you fast forward and you're suddenly finding yourself in 2000, 2001, or even today, and you look at what are the big enduring companies that have been built with large sustainable business models coming out of the first generation of the internet, a lot of those are at the application layer. And so we expect to see the similar transformation happening as we push forward, from the infrastructure getting built in the AI world to suddenly the applications getting built in the AI world, and those applications sort of fundamentally transforming how businesses conduct business and how consumers interact with each other and with information. And so that's the huge opportunity on a go-forward basis.
One question I had, like a follow-up, you mentioned briefly about the technological wave getting compressed. From that perspective, if you're a founder today, you're building in this AI wave, and you look back in the past in the cloud wave as an example, maybe like 10, 12 years ago, what are some of the key things now founders need to do differently from what founders, had maybe the luxury of time, maybe they had like more resources? What was kind of different from back then to today?
The most important thing for founders in the AI world is that the state of the art is changing so quickly. And so there's both what's happening again at the core model layer, but all the tools and techniques that that folks are using to build robust, high performance applications that are both accurate and responsive and reliable. And so the technology is still relatively immature. And so the techniques you're using as a founder and a builder to make sure the technology sort of delivers on the promise is changing very, very quickly. And so the hard part for founders in today's environment is that you both need to be sort of on top of what's happening in the state of the art and making sure you're sort of incorporating that into your roadmap and incorporating that into your thinking. But at the same time, if you're too responsive to the latest new academic paper or the new approach, you'll be constantly changing your tail and spinning your tech team with the latest and greatest. And so having a clear-eyed view on what is most important to delivering the value proposition I'm trying to deliver to my customers, what's the best approach from a technical perspective to take advantage of that today, how does that potentially change 6 months from now, 12 months from now, so you can have a really coherent, thoughtful roadmap. And so that's probably the hardest part for founders in today's environment. I think the second hardest part is that in the early days, if we go back to the analogy of the web, in the early days of the web, there was a lot of naysayers. Like, this internet thing was a toy, no one got it. And clearly that's not the case with AI. Everybody seems to get it. The rate of adoption at the Fortune 500, as one example, is extraordinary. The AI spend in the Fortune 500 is close to, in 1 year got to where the SaaS industry took like 8 or 9 years. So you're just seeing massive adoption, massive experimentation. And so the C-suite and the Fortune 500 get it. The large incumbents, the hyperscalers and the other big software players in today's world clearly get it. And obviously the startup community gets it, and you're seeing a lot of dollars flow into the space. And so this is a obvious trend. It's not a non-obvious trend. As a founder, sometimes it's best to be playing in non-obvious trends. And the benefit of an obvious trend is that you can get audiences with customers or with consumers. You can raise capital because there's a lot of capital pursuing opportunities. The negative is that you will not be alone. Any space you're operating in is going to be competitive. And so how do you think about your key source of differentiation? How do you think about competitive advantage? How do you think about creating data moats? How do you think about business model innovations? How do you think distribution innovations that will allow you to win in what will inevitably be a competitive space?
That's fascinating. I think you brought up a very important point that AI seems to be very obvious these days. What's exciting to you outside of AI? Like, do you think there are any spaces or industries that are hitting an inflection point or about to hit an inflection point? Or do you feel like it's all AI at the moment?
Yeah, for us, if you go onto our website, we're investing in founders building our AI-powered future. So for us, it's AI all the time. There's clearly opportunities outside of AI. And while we who sort of live and breathe in the tech world feel like AI is obvious, I gave a talk to a non-tech audience in August. And obviously the degree of understanding is different. And so while it's obvious to us, it's still early in terms of broad-based consumer adoption. It's still early outside of a lot of experimentation and broad-based business-to-business adoption. So it's not to say that it's done, but it is an area where there's enough obviousness that people are pursuing it. Sort of outside of AI, look, we continue to see great opportunities. Just thinking about the general IT stack, if you will, we're B2B investors. AI builds off of data, and so you need a clear data infrastructure, and there's still opportunities in the data world. And how do you think about managing and governing and making that easily accessible for these new applications that want to train or fine tune based on that data? So still opportunities there. If you think about the security realm, still massive opportunities in the cybersecurity space. The threat vectors, only seem to increase, and that probably will continue to increase with the advent of AI. So lots of opportunities there. If you think about big challenges for the world, climate obviously remains an interesting area, and so there's opportunities for technology and AI, quite frankly, to play a role in that. And then lastly, obviously, we don't invest so much in this space, but if you think about the biomedical realm, just tremendous room for innovation. Again, perhaps enabled by AI, but you're seeing an opportunity to really create new transformative treatment modalities and how you treat patients and interact with patients that we think are really interesting. So there's no lack of opportunities across the innovation ecosystem. One of our perspectives is that all of those will be infused with AI. It is a fundamental technology. It is something that has broad-based application. So unlike some other spaces where it was maybe not as a big technical trend wasn't as transformative, this one will be transformative across markets.
As I was doing some background research for this interview, I read a blog that you wrote in 2023, and the thesis of the blog, if I'm not mistaken, was there's no such thing as an AI company. I thought that was fascinating. Could you unpack that a little bit for the listeners?
I wrote this right after ChatGPT launched, and as I mentioned, that was sort of one of those seminal moments that you look back on and you're like, wow, that is a transformative technology, and for really an early demonstration, already very powerful, and it just struck me that AI will be incorporated into every company. And so whereas as a founder you may define yourself, I'm an AI company, you're gonna see over time that's not really the case. It will be like calling yourself an internet company in 1999. Yes, people did call themselves internet companies, but it was really it was everywhere. And so, fast forward, and we're going to see, you're going to define yourself as, I'm a healthcare company doing XYZ, but I'm doing it with AI at the core. And so that's the point, that over time, AI will be permeated across every application, every consumer experience, every B2B experience. And in so doing, and in that happening, you will not see the distinction of like, I'm an AI company.
So Chip, I would love your kind of perspective, right? You're mostly seeing teams which are significantly more rooted on the academia. You're based in Boston, so MIT, Harvard, some of the best universities are around you, who are trying to spin off companies. You're also seeing companies which are fun being in New York, more application oriented, like distribution, product being their expertise. What do you see differences in these type of teams who are trying to build in this new AI wave? Does one have a competitive advantage over the other, or a balanced approach is better? What are your thoughts on this?
Yeah, I think from a founding team perspective, we tend to resonate best with teams that sort of combine two unique skill sets. One is a deep understanding technically, and this is what I was referring to earlier, understanding of the state of the art and of understanding of where roadmaps of your sort of building blocks are going, and so how you can use that to build a high performance, highly reliable, highly scalable application. So you need deep technical insights and building skills. On the other hand, that alone is not enough, and so the best teams we're seeing are pairing that with a deep understanding of the domain they're going after. And so if you're building a legal tech company, you come from, someone on the founding team comes from the legal space. And so how do you incorporate in that domain understanding, the understanding of the workflows, the understanding of the problems that the customers are facing, and using that understanding to come up with a creative and unique solution that takes advantage of the underlying building blocks. So I guess that would fall into the category of the balanced approach, that it's hard to be all academic and all technical. At the same time, if you're just all commercial, you're more likely than not to build something that probably feels a little thin from a technology perspective. And you need to be thinking about how you leverage this technology in unique and different ways, how you leverage the technology to build competitive advantage and competitive moats. And so the combination tends to be the what we see as the sort of best approach from a founding perspective.
No, I think the workflow piece is super critical, right? I think you have some off the shelf tech stack which is available, which was not maybe available even 18 months ago. And if you understand the domain really well, you can really build something from the grounds up, which is meaningful. So yeah, totally agree on that.
And I think one addendum I guess I would make to that, a lot of that a lot of what I just went through, I think, is informed in part by where we invest, which is we invest, sort of one layer above the foundational models and one layer above the compute layer. If you're starting a new company in, a new foundational model, good luck, go get $5 billion. But you need very, very deep academic expertise, many PhDs in applied math and machine learning and statistics and other things. And so the depth of technical requirements and the likelihood of that maybe coming more from an academic space, I think, tends to happen more as you go down the stack. And as you go up the stack, there's an increased weighting on the commercial domain, understanding the commercial domain, understanding the go-to-market, and understanding how to think about sort of real significant sources of competitive advantage.
Being on the board of $1 billion company or that of a public company is something that 99.99% of people will never experience. So I think a lot of people listen to this are probably curious what the experience is like. So for someone, who's listening, who's never done this before, might want to do this someday, what have you enjoyed about the experience the most? And what do you think someone should look to do if they ever aspire to be on the board of $1 billion company or a public company?
Make great early stage investments is one way to be the aspiration. The nature of being a great board member, it changes as companies grow, but in some dimensions it doesn't change. So the core job is all about, sort of, is there a clear strategy? Is the team aligned against that strategy? Do we have the right people in the seats? How are we thinking about investment in capital allocation and making sure we're spending money in the right places? I think that's true. All of that is true if you're a 5-person startup, and if you're a 5,000-person startup, yes, there's more complexity to the business, and so what would appear, wildly spread too thin for a small company is not spread too thin for a larger company. And then I think the other key thing is to identify as a board member, by and large, when things are going well, your job is to stay out of the way and let things go well, but is to be headlights and to understand what is that next phase of growth? How am I going to think about how does my team evolve as I go from 1 million to 10 million? How does my team evolve again as I go from 10 to 50? How does it evolve again, 50 to 150? And so what are the big break points? And how do you think about anticipating those break points? That's probably the biggest value we can add to our companies that are growing very quickly, is to help them anticipate what's coming down the pike that they may need to worry about, and then get them focused on how to drive success around that. And then I think the other big thing is to identify sort of the crucial forks in the road and put intense focus on those crucial forks in the road, and understand when you have a 55-45 decision, how do you think about that choice, and how do you think about, once I do commit to the 55 side of the road, to really lean in and make sure you've got all the right resources focused on the right issue to drive success on a go-forward basis.
That's a great answer. I think that's extremely insightful. I'm going to use MongoDB as a little bit of a segue into my next question, which is about AI and data. So it seems like data is one of the big ingredients that you need to scale AI models alongside compute and algorithms. It looks like we're going to, do a lot on the algorithm side. Seems like we're going to do a lot on the compute side. It does look like we are running out of real-world data that we can train these models on. Yes. I know that there's talk of synthetic data, and so on. But what's sort of like, your gut instinct? It doesn't seem like anyone's figured it out yet. I mean, we are talking about creating new data, like, cameras literally watching people doing their jobs and giving models new kinds of information. Where do you think things are heading? Do you feel like there's going to be a big investment in creating real world data? Do you think there's going to be more investment towards creating synthetic data? What's your gut instinct on this?
Yeah, I think a lot of that depends on the use case. And so obviously if you're building a AI-powered system that interacts with the real world in a physical manifestation, you need some unique combination of real-world data with synthetic data, because you can't cover everything, but you need to have enough real-world data that it's representative of the situations that you may run into. And this has, I think, been a challenge for a lot of the players in the autonomous vehicle space, and that the breadth of data that you need, even if you're doing simulation and even if you've got synthetic data and real world data, the degree of information that you need is quite high. And so you have to largely be funded in a way that you can think about weathering a relatively long development cycle and a relatively long training and development cycle. In the tech space and sort of multimodal, the more traditional AI world that we think of with these foundational models, they will hit the data wall. I think the last prediction I saw was 3-4 years from now there will be no more data, and that's where one of the points of view we have at MongoDB is that the best applications are going to be applications that build on top of these core foundational models, but join that with real world, real time data that's operating in a company's environment. So the core enterprise database, in the case of MongoDB, hopefully them, it always has the most up to date information. Always is knowing what consumers or end users are doing at any point in time. And if you marry that real world data, in real time with a core foundational model, you can create really interesting and powerful applications. And so that data won't be used to necessarily train in the classic sense, but it'll be used to provide a really compelling end user experience. And so that's, I think, the marriage you're going to see. And we're also pretty strong believers that in the enterprise environment, that the large core foundational models may not be the way that everything goes, because you have so much internal data and so much internal domain knowledge that you don't necessarily want to expose to the end world, that you'll tend to see sort of ensemble models where there's going to be a proprietary fine-tuned or proprietary data pipeline based on your own company's information, and you use that perhaps in conjunction with a core foundational model to, again, be able to deliver unique insights and unique outputs that are really tailored to the specifics of the company environment.
That makes a lot of sense. Since you're investing in a lot of these companies, out of data/chip/algorithms, where do you think the biggest opportunity is at this point?
Yeah, on the chip side, it's not a space we're investing in. Again, see earlier comment on billions of dollars, which is hard for a seed fund. We're a good sized seed fund, but we're still a seed fund. That said, I do believe there's going to be disruption. You can't see a company like NVIDIA controlling the vast majority of core foundational technology and what's going to be the next big massive platform. And so their success, their market cap, their margin structure, all is going to attract competition. And so I spent some time last week with a startup that's, I think, raised 150 million building a new inference chipset. And so you're going to see more specialized chips. And so some are going to be really good at training, some are going to be really good at inference. We think that's a huge opportunity. We're investors in a company that's building sort of a hypervisor layer for AI models. And so how do you make models portable and less hardware dependent? We think that'll be a huge enabling technology to recognize that I think we're going to live in a much more heterogeneous hardware world. So we will see significant innovation. We will see disruption to the NVIDIAs of the world. And I think that's going to be good for the ecosystem as a whole. For us, from an investment perspective, we tend to focus, as I said earlier, sort of up the stack. So we're investing in data and infrastructure to make sure that, again, you've got the core building blocks. We're investing in sort of all the classic quote unquote abilities, the observability, manageability, security, reliability. How do you think about these new platforms and how do you build robust applications and really sound developer experiences that allow you to build those applications much more quickly? And then finally, we're investing at the application layer. So how do you take advantage of the compute and the models and the data and the building infrastructure to build really compelling new end user experiences? And there, the challenge is you can't sort of slip AI into an existing workflow. You have to sort of fundamentally rethink the workflow and rethink the jobs to be done and sort of approach it in a really first principles way. And I believe we're sort of early days into how people are thinking about the application layer. And it's not a co-pilot attached to a CRM. It's someone who rethinks what a CRM is. And you suddenly have this entity within your systems that is able to do work and create jobs and make things happen and actually take actions is where we're heading, obviously. And that's going to be an entirely different application framework and way of thinking. And so that's what we're excited about on a go-forward basis.
So Chip, you obviously, you guys are a seed stage fund based in New York and Boston. You see a lot of different companies. A lot of our audience are like startup founders who are kind of like thinking about building new companies. maybe if you can share like three things you look for companies and people pitch you, I think that'll be like very helpful for people to understand as they try to reach you or reach other tier one venture capital funds.
Yeah, so the first thing, I'll harken back to what I said earlier, is sort of a core founding team where it's sort of obvious why now. And so it's that unique combination of technical insights married with problem insights. And one thing that comes across when we're talking to founders, the best founders, you can just tell there was no other choice. They have such burning passion to build and create what they're building that just sort of, exudes out of them, and you get the sense that nothing's going to stop this founder in terms of building this particular vision. So it's not just resume, which is important, but it's sort of passion and grit and perseverance and drive, and those are the things that obviously get you through the inevitable ups and downs of building a company. And so we start with looking for founding teams that have all those characteristics. The second is, and different venture capitalists have different points of view on this. I'm drawn to very large market opportunities. If we go back to MongoDB, what was the thesis there? At the time, the database industry was $30 or $40 billion, and it felt ripe for disruption. Today, it's $100 billion plus. So a massive market obviously allows you to build really, really big companies. And so those markets can be, in Peter Thiel speak, 0 to 1 markets. They don't exist until you exist. And those are obviously very exciting market opportunities, or there can be a chance to really sort of fundamentally disrupt and transform an existing very large market opportunity. And the best founders, when confronted with a really large market opportunity, also have a really clear viewpoint on how they attack it. You don't attack it broad. You tend to attack it much more narrowly. And so we use different analogies. What's the chessboard they're going to play out to get to victory? And how does step 1 lead to step 2, lead to step 3? And the best founders have this unique ability to not only articulate that vision, but do so in a way where you're like, heck yeah, that's totally the way the world's going to play out. And so I want to be part of that, because they've got a really sane and well-considered point of view on how to attack this very large market opportunity. So that's the second piece. And then the third piece is teams that are really thoughtful about competitive advantage. As I said earlier, every AI space seems to have dozens of players. And so what is my unique advantage? Is it going to be in how I'm rethinking the application experience? Is it going to be in the data I'm going to bring to bear? Is it going to be in some combination of those things where usage drives more data, which drives better end user experience, and I can translate that into more data? So just a really clear-eyed view on competitive advantage. And then finally, a perspective on how they think about go-to-market, and that's part of the focus in attacking a large market through a series of maybe more niche market opportunities. But how do you go to market? How do you think about go-to-market? Because distribution will increasingly be important for these young companies as some of the core technology solidifies and to a certain extent commoditizes. You'll have to have a really sane and well thought out go-to-market motion.
So Chip, you're also a founder. Like, you may have not built like a startup, but you built a venture capital firm. And it's always like, interesting to me, right? Like, you had a great career at Greylock. You most probably would have been running another fund at this point if you're not started a firm. What made you started back in 2002, right after dot-com bust, which is most probably a very tough time by itself?
Yeah, there was really two motivations to starting. One was just this desire, for whatever reason, to build and create. So yes, I could have stayed at Greylock, and I could still be at Greylock probably. But the opportunity to start and build and create something from scratch is, you hang out with entrepreneurs long enough, and you see that passion and that excitement, and then you realize someday that, wait a minute, I have that passion and excitement to build and start and create something in the venture space. And so that was driver number one. In terms of the timing, we had a point of view, which in hindsight I think was wrong, that in the depths of the dot-com crash, it was actually the best time to start a new firm. That everybody was distracted, they were all dealing with portfolios that were upside down, and that we'd have this opportunity to take advantage of a time period where other venture capitalists were maybe slightly had their eye off the ball, and say that was a great opportunity to start and build and create something new. And so So those two things came together, and is what led me to say, let's jump in and start this. In hindsight, the timing part I think was wrong. As I said, it's much easier to start a venture firm when you're going into one of these massive platform shifts, because that is what creates a lot of opportunity. 2002 to 2005 was a relatively fallow time in terms of innovation and new opportunities, and there wasn't a big platform shift sort of going on. So we were a few years early, but we're still here, and so it all worked out. But being a founder, you want to both get the timing right. You can be too early and be too late, but also have that passion and drive. And so in addition to starting Flybridge, I started another venture firm called X Factor Ventures, which is a young, small pre-seed fund focused on backing companies founded by women, which is a huge unmet need in the marketplace. Something like 85% of the capital goes to male-only founding teams. And so 7 years ago, we started a small fund that's part of the Flybridge platform to go after that opportunity. And 100 portfolio companies later, that's something hopefully we can be in a position to scale as well.
So part of the reasons why you have these conversations is to figure out what's going on, but it's also about what's gonna happen in the next 6-12 months and so on. So as you're investing, as you're talking to a lot of these founders, as you have your eye on these trends that are coming up, what are sort of like the key developments, trends, anything else that you are looking forward to in AI over the next 12 months?
Yeah, I think in the enterprise environment, which is where I spent a lot of my time, there's a lot of experimentation going on. And so if you go into your average, Fortune 500, Global 2000 company and ask them about their AI initiatives, I was talking with a friend of mine who runs a Fortune 50 company the other day, and they have 50 initiatives going on. And I'm like, hey, how many of those are in production? Not that many. And so I think in the next 12 months, one of the things I'm looking forward to the most is seeing all these ideas and these prototypes and these experiments that people are standing up move into production. And that will be both internally developed applications, or they've done a pilot or a small scale rollout with a startup that's solving a particular problem, but seeing those get adopted across a particular business unit, particular function, really see production use cases that are at scale and driving significant benefit, because those successes are what will free up the investment dollars that will drive future success in the B2B space. So I think the next 12 months are all about prototype to production, and it's something I'm pretty excited about.
I had no idea that so many companies had so many initiatives just waiting to go. Just one final question. It's a fun question. We have this for all of our guests. Where do you stand on AGI? Do you think it's going to happen? And if it does happen, what do you think the world's going to look like?
Yeah. Second part of the question, I'm not sure. And I think that's one of the big sources of anxiety for a lot of people, is that we don't know what this AGI world is going to look like. Embedded in my not sure is I'm 100% a believer that we will get there. If you look at the compute curve in terms of dollars per flop or whatever your favorite metric is, the inexorable rise up will get us to a point where we're able to dedicate enough compute to these models that will also get increasingly more sophisticated in a way that it seems inevitable that we'll get there. Is it 5 years, 10 years? I'm not sure. It's probably not 2 years. I know people on the optimistic side are in that camp, but I do think we'll get there, and that unlocks a whole host of societal questions, whole host of philosophical questions. How do we think about aligning with AI in a way that that's going to be beneficial to all of us? But I think it's Ray Kurzweil has a great quote. It's like, humans are the only species that creates tools to make us smarter. And this will be the ultimate tool to make us smarter and more creative and more fulfilled. So I'm very much in the optimistic camp, but not naive to the challenges.
Okay, awesome. That's a great answer. Have you had a chance to read Kurzweil's new book?
No, it's sitting on the bookshelf. I have not dug into it yet.
No, so I hadn't read the first one. I think I was probably too young when the first one came out, but no, the new one was really good.
Too young to think about how do I live forever.
Exactly. It's maybe 6 years old back then.
Yeah.
No, this was awesome. This is a fascinating conversation, Chip. I've learned a lot from you. I think it's always sort of, good to sit down with folks who've done it and continue to do it. So thank you so much for making the time to chat with us, and we really appreciate this.
Yeah, Zain, Hassan, thanks so much. It was a great conversation.
That's it for today. Thanks for joining us, and please subscribe so you don't miss another episode. Take care. Bye-bye.